Welcome everyone to a new update. Today we'll cover everything you need to know about the current crisis happening with all the currencies across the globe, and we'll be diving into the actions taken by governments. However, something special is going to happen today as we're going to give away something really cool alongside our partner Coinmers. Interested? Follow our business account on Instagram, which you can find beneath, and later today you will receive the information on that account. Before we continue, make sure to subscribe to this YouTube channel and hit that like button if you do. We are also live tomorrow and on Thursday on 7 p.m. Central European Time. If you also like what we do, we also have the trade letter with the latest altcoin setups, market information and market analysis. You can try it for free for 1 week and the link can be found in the description beneath. The same goes for our premium membership, which covers my personal trades, trade IDs and more. This can also be tested for 1 week for free. I will start by explaining the inflation and Euro-USD parity following the energy crisis in Europe, as the war in Russia is putting some pressure on the price of gas and energy. After that, we will continue analyzing the USD. The topics will be rate hikes, unemployment and FOMC members' expectations about the following years. I will also inform you about the consequences of the PCE data release on the 30th of September, which we've just had. Afterward, I will move to the GBP and explain the sharp decline in British pound against USD and the new plan of the new government. Lastly, I will shortly give information about the Japanese yen and the recent intervention of the Bank of Japan. Possible effects of all related subjects on Bitcoin is also worth mentioning before closing. I hope you enjoyed, friends. Let's start off. Euro and Eurozone are going through hard times. The energy crisis and strong USD are affecting the stability of the euro. After the start of the Ukraine-Russia war, Europe announced sanctions targeting some products imported from Russia. The most critical product was the natural gas coming from Russia, since Europe is highly dependent on Russian gas. Russia also stopped supplying natural gas to Europe in response to Europe's sanctions, which altogether created a compounding effect on the price of gas, resulting into a spike. Gas is used to produce electricity as an input in manufacturing and heating. The massive increase in gas prices resulted in high inflation all over Europe. Inflation is not only a problem for Europe but also a big problem for all countries in 2022, putting strain on the global economy. Most countries started to increase interest rates to fight inflation in 2022. The Federal Reserve in the US was one of the first to raise interest rates, and eventually the ECB had to follow the same path. In the last meeting, ECB increased interest rates by 75 basis points, and Lagarde predicted to continue to hike rates until the target inflation of 2%, which is currently 9.1%, so there's a long way to go before we reach normalized interest rates. In the graph, it is very clear that the rate hikes started suddenly and very aggressively in the recent months. Even though the ECB started to hike interest rates aggressively, Euro-USD continues to decline sharply. This is most likely because the Fed started rate hikes way earlier. The US doesn't have an intense energy crisis like Europe, as it is not as exposed to the war in Ukraine. In order to combat the Eurozone's high inflation, Lagarde says the ECB will continue rate hikes, just like the Fed's Powell said at the last FOMC meeting. It is hard to guess if Euro regains its position against the USD, even after following rate hikes from the ECB, which are expected. The exact movement of the Euro-USD pair is difficult to predict, but it will be key to look at economic health and inflation in both the US as well as the Eurozone, as this will determine monetary policy in both regions and affect the Euro-USD pair. As we also know, CPI data has been coming out in the past months from Europe, which has been rallying massively and showing numbers not seen in a long time. It's good to understand that the actual inflation rate for Europe is that high due to the weakening of their own currency, the euro. Therefore, it is very important to understand that we'll be seeing a policy being followed by Lagarde and the ECB relatively soon. Question is, will the ECB continue hiking interest rates, or will they also start using QE like multiple governments have been doing? More on that later in this update. When we talk about higher rate hikes, mean faster appreciation of euro against the US dollar and more pressure on decreasing inflation. Lower rate hikes would support economic activity and growth but create less effective policies on inflation and stability of the euro, adding more issues for the long term. Let's continue with the US dollar. On the 21st of September, FOMC decided to increase interest rates by 75 basis points again like the previous month. According to the CME pricing, there were some expectations of 100 basis points, but that was quite a low possibility. CME is the leading derivative market in the US, which delivers a way to manage financial risks. As you can see in the graph, the inflation has been high in the US this year and is still well above the 2% target. Additionally, the growth rate of the GDP has been negative for the US in the last 2 quarters, which means that it is in a recession, and now it's officially confirmed that the US is in one. When you combine both, the term stagflation comes to mind. In his speech, Powell clearly stated that the Fed's primary goal is to bring down inflation, which has been running near its highest levels since the early 1980s. The main message was the same as the Jackson Hole speech on August 26th. The statements were hawkish and robust. It is expected that a total 125 basis points rate hike will happen across the next 2 meetings in 2022. At the meeting on 2nd of November, 75 basis points looks like a higher possibility for now. At the end of 2023, FOMC members expect a 4% interest rate, which means 50 basis point more rate hikes in 2023 and not decreasing it. These senators are determined and represent a very strong USD for the following year. Because there were some assumptions that the FOMC would start to decrease interest rates in 2023, however, it is clear that they will keep the interest rates high if they do not change the projection. Another vital piece of information was the unemployment rate expectation, and the FOMC expects it to rise to 4.4, which is currently 3.7. That can be interpreted as they increase the tolerance of unemployment for 2023 while they combat inflation. As we have seen on Friday, PCE data was coming in already, and recently we've also been seeing GDP and CPI data coming in. PCE is compiled by the US government monthly as one way to measure and track changes in the price of consumer goods over time. PCE is a key data because FOMC members consider PCE for decision making more than CPI data. If the PCE data continues to be announced as less as expected, which is likely as it's leading and we see commodities falling, it can lead to a decreasing probability of 75 bips increase of the next meeting. Contrary, if it is going to be higher, then we are probably going to see 100 basis points. A 75 basis point increase would probably impact the market and Euro-USD neutrally. However, 100 basis points likely skyrocket the dollar index mostly and create bearish movements for all risk-on assets like crypto and stocks. Ultimately, Powell repeatedly said that FOMC members will continue to rate hikes and not decrease the rates in 2023. The message clearly stated that a strong USD is what FOMC members predict for the next year with lower inflation and higher interest rates. Now there's also another story to this, which is the case that the hikes are continuing while economic data is getting worse. In earlier videos, we have been discussing an impact on the economic situation, which is ultimately a result of the markets getting an impact by the policy of the Fed. In that case, factory orders have been dropping swiftly, most likely ISM is going to drop fast, and unemployment rate will be shooting up rapidly at a later point as companies are laying off their people and earnings season coming in bad, as we have already seen with FedEx. Next to that is the impact of policies around the world from Great Britain to Japan, resulting into an impact on the yields and the dollar. If the Bank of England changes their policy, most likely it will also impact investors in the US, as they will be likely expecting the same outcome for their currency. What did the GBP do and why did the yield skyrocket in that country? It is time to move towards the British pound. As Britain's new government outlines plans to cut taxes and boost spending, the British pound has resumed its decrease against the US dollar. Finance Minister Kwasi Kwarteng unleashed tax cuts and the biggest increase in borrowing since 1972 to pay for them. The government will have to borrow more than £72 billion over the next 6 months to implement the plans. On the other hand, British government bond yields increased massively after the announcement of the economic plan. 5-year bond yields rose to more than 4.5%, and the rise accelerated massively on Friday after new finance minister promised tax cuts. The Bank of England raised interest rates by 50 basis points on the 22nd of September. The new economic plan was announced the day after the rate hike, and the next Bank of England meeting is on the 2nd of November. There is some speculation that this meeting can make an emergency meeting to increase interest rates before November. After the massive decrease in the British pound and increase in British government bonds yields, the Bank of England announced an intervention on the 28th of September. Bank of England stated that the bank will temporarily purchase long-dated UK government bonds to restore orderly market conditions. As a result, bond yields started to decline, but it also created more sell pressure on GDP against USD. There is no clear deadline for when Bank of England will stop intervention, and it makes GBP value more complex and unknown against other central bank currencies. As you can see in the chart, inflation is very high in the UK. Bank of England started the interest rate hikes because of the high inflation. However, there were arguments that they were late to the act. The extreme movement of the British pound against USD might be a signal of questioning the credibility of the new government and the Bank of England in fighting inflation. All in all, GBP doesn't look strong against the USD. All the other currencies lose value against the USD, but the British pound is now at the lowest point in 40 years. Additionally, change in the government and non-stop rate hikes from Fed do not help maintain the British pound's accountability. If the Bank of England does not announce a very high rate hike in the next meeting or before, the British pound may continue to lose value against the USD. Or, and that's the variable most people are forgetting, the economic data from the US is going to be absolutely terrible, and that country has to pivot as well. Lastly, let's take a look at the Japanese yen. Japan is the only country with negative interest rates in the world, as other major central banks raise interest rates to combat inflation. In response to the Bank of Japan's extra loose monetary policy, the yen fell to a 24-year low. Then, for the first time since the early 1990s, the Bank of Japan intervened to buy its own currency on the 22nd of September. There is little chance that this action will have any worldwide economic effects, but it's also unlikely to cause too much harm either. A significant interest rate difference has opened up as a result of the Fed's rapid monetary tightening this year, resulting in yen's value falling against the dollar. It would probably be accurate to expect the Japanese yen to lose value against USD. However, Bank of Japan interventions may change the trend if they start to buy Japanese yen substantially. We have discussed the major currencies in the world. Euro is in a very tough situation because of the Russia-Ukraine war and the energy crisis. Additionally, the ECB will increase the interest rates to fight inflation and protect the value of the euro against the USD. FOMC started to increase interest rates earlier than the other currencies we mentioned. However, inflation is still high, which FOMC members cannot tolerate and must reduce with any cost. On the other hand, the government has changed in the UK, and they are actually trying a new economic plan which can affect the value of the British pound. We need to see how the Bank of England will respond to the new program. The Bank of Japan, on the other hand, was silent on the losing value of the Japanese yen, but they executed the first intervention by buying their own currency. In summary, the USD is very strong and will likely maintain that power for longer, as FOMC members are expected to keep high interest rates next year. All the other currencies will be challenged to maintain stability in the meantime. A strong USD will probably be negative for Bitcoin and other cryptocurrencies in the short term, because liquidity will likely stay in USD due to the risk-free high interest rate on the US dollar. However, a strong US dollar will most likely be having a negative impact on the markets of cryptocurrencies if it continues to rally like it did the past year. If it stabilizes, we are going to have a positive impact to the markets, as that's very comparable to the price action of Bitcoin in 2015 and 2016. A strong rallying USD is bad for markets. A strong stabilized USD that will be giving space for a relief rally to the markets. Thanks for watching to this update. Make sure to check out our live stream tomorrow evening at 7 p.m. and on Thursday, and make sure to hit that subscribe button beneath. Also, don't forget to check out our trade letter and premium membership and our business account for the giveaway later today. Remember, don't do stupid shit, stay calm and avoid emotional trading. Ciao!